Hello, Forest Traders. Hello, Forest Traders. I'm so excited always to be with you guys. You're welcome to today's broad. Today, episode 15, Traders Focus, our series. This year, this year by December, we will be celebrating our one year anniversary on Traders Focus episode. So wait December, we have some packages, free packages for you. I'm going to do some giveaway to my dearest subscribers who have been there with me for the first one year. So I'm excited with you guys because I've been sharing gems. A lot of persons have been giving me good feedbacks, especially those who have joined the Telegram channel. They are thanking me because we have been making the market back to back. Since 2 weeks now, we've not gotten any lost trade. It has always been rosy, 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 rosy. I'm not telling you that I'm 100%, I have a 100% strategy that doesn't hit stop loss. That's not what I'm telling you. But my strategy is 80%, has a 80% success rate. So sometimes, some weeks, we don't even inquire any loss in our trade. That's how good we are. Though this channel is not for hypes, it's not for boasting. This channel is simply to tell you what are going in the market. We don't do hypes here. And if you can watch, we've not shot, we don't like showing you stuffs just to intimidate people. This is not what we're here to do. We are here to teach you, especially those of you guys who are struggling in this business, telling you that there is always light after the tunnel. Okay, at the end of the tunnel, you always see light. Please keep pushing. It actually took me 4 years to crack this stuff out. So I've struggled a lot. I've lost a lot in this business. But thank God I didn't give up. The market has actually given me back all we've lost. So the same thing can happen to you. The only thing is that you need to have access to knowledge and do the right thing. Once you have access to good knowledge, do the right thing. Then I promise you, we will get there. And when you start making the market, don't worry. Whatever you've lost, the market will give it back to you. So today, what do we have? Now we are going to explain two things today. First, the best time frame to trade the market, and then how to study pullback like a pro. No, am I going to give these two out in just one video? No, 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 no. Next video, I'll talk about the best time frame to trade, or maybe probably as I'm going into the analysis today, I'll touch it. But next time, I will really hit the head on the best time frame to trade. But for now, I want to teach you because this is more important. I want to teach you how to study pullback like a pro, how to study pullback like a pro. So before we go to the nitty-gritty of today's video, please, 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 I love what your good guys are doing. Some of you are sharing my video. I'm so excited. I'm happy because you are finding value in what we are doing here. We're not doing hype. And most of you who have been following our trade is seeing that we are actually practicing what we preach. We are not some channel that will be forcing you to subscribe, to do this, to pay money to do this. That is, if you want me to mentor you, you would like to pay me money. If you don't pay me money, I'm still making money from the market. It's none of my business. Okay? Mine is for you to consume this content I give to you, consume it, learn from it, try to practice what we preach here, and you will transform your trading life. I will just be happy if I see some person coming up to tell me that, sir, you changed my life. Sir, what the advice you gave me actually worked for me. There's no more joy greater than this. For me to transform traders, people from where they are struggling to a better people. What kind of life do you want? You want a life that you have time freedom and still make money? This is Forest is going to give you that. But if you don't seek for right knowledge, not junk that is over the internet, there are a whole lot of junk knowledge. You'll see them promoting nonsense. Guys have been there. You are very fortunate if somebody shared this video. Just thank the person. If you come across this channel by accident, just be happy, just be grateful that this. If you take what I'm saying here serious, this will be your final bus stop. I'm telling you, because what I'm teaching you here is the real deal. What we are practicing here is the real deal. And those people who have been in my Telegram channel, mind you, my Telegram channel, I've been running that for over 4 years now. It's absolutely free. I drop free signals, and those who are making money silently on that Telegram channel, they are making the money. They are making money. If you doubt, the link on the Telegram channel is in the channel, in my channel, in this my YouTube channel. Just go to the homepage. You will see, you click there, join. It's absolutely free, and you just be there for 1 week. This week that is coming, join the Telegram channel and see the signals we post just to confirm if you are having doubts. What we do here is real deal. So please, if somebody gave you this video, share this video to you, and you come across this channel, just be thankful. This should be your final bus stop. Practice what we preach here, and guys, you are going to make money in forex. In fact, you will transfer your trading life that you'll be shocked that is this how this thing works. So this is this is the puzzle I've been missing to fix. So I told you that if you don't have money for mentorship, just be consuming what we drop here, the videos we drop here. Though it's not going to be everything, you're not going to have it on a video, but we'll be dropping it bit by bit. So you can be putting them together, putting the puzzles together until you get it. But if you want me to mentor you, fine. Drop a comment on the comment section. We'll connect and we'll see how we'll go about that. But my goal is to help at least 5 traders this year to become successful. I need 5 traders that I'm going to mentor personally. I'm going to replicate myself personally. I've gotten one already. I'm about to get the second person is on the process. So I need extra 3 persons. So if you're watching this video, you want to transform your life before the 2025 the year 2025 runs finish this August. We have over less than 5 months to go for this year. So if you want to transform your life, your trading journey from now to December, you want 2025 to be that year that your trading has changed, kindly connect with me. I'm looking for 5 people to replicate myself, to teach what I know in this business, and to help them to become profitable, successful traders. 5 persons. I've gotten one, and second person is already on the process. So 3 persons to go. So if you are that person, you've been struggling and you want to transform your trading life, please kindly DM me. I want you to know that it's not going to be free. It is not going to be free. The only free thing I post here is my Telegram channel. The signals I drop is absolutely free. It's my way of giving back to society. This YouTube channel, the videos I drop is actually free for your consuming. But those 5 persons, I'm going to replicate what I know. All these things I teach, I put them together and help them to decipher it, to understand it, and to trade it by themselves. So that by the end of the year, from now to the end of the year, we must have gotten 5 successful traders that is going to become successful. Because I want to build a team of traders. There is something cooking I want to cook in this city of Port Harcourt. I want to make Port Harcourt one of the biggest trading city. But we want to start small. I want to train successful traders. And when we start from Port Harcourt, then we can replicate it to other states. I want to have a team of successful traders, not the hypes we see on social media, people who I ask you to come and subscribe to join their Telegram channel, their Signal channel. That is nonsense. Those things are nonsense. How long will you be taking Signal? You want to be feeding, like baby feeding. I want to show you how to catch the fish so that at your own time, anytime you can be catching fish, not for me to be giving you peanuts as fish. So guys, that's all for that. We want to be moving to the nitty-gritty of this video. Now, I want to teach you how to catch pullbacks like a pro. If you understand what I'm going to teach you here today, guys, you'll be a professional in catching pullback. In fact, that is the best kind of trade you should be trading. Pullback. So guys, I want to share my screen with you guys, and I hope this last traders focus episode that we posted last time, you guys enjoyed the trade I dropped. All of them played out to the teeth. The GBP USD hit TP, the other one Euro hit TP. We've been banging it back to back. So all those people who watched the videos last time, and those who are in my Telegram channel who are following the signals, we banged it on Thursday, which was a day before the market closes. We, after banging our GU, we saw another entry on Chef JPY. We hit it, though that did not hit TP, but it gave us actually up to 100 pips. We are able to take out 100 pips from the market before the market closed. So it has been profit, 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 profit all the way. So guys, I want to share my screen with you guys now so that we'll go to the nitty-gritty of the day, how to master pullback like a pro. Okay. You are welcome inside of my screen. This is Living on Forex Life and Direct. Please, before we go to the nitty-gritty of the day, please kindly like and subscribe. Subscribe and like this video. So now, guys, I'm giving you a few seconds to do that. So now, guys, how can you study pullbacks like a pro? How to understand pullbacks? Now, let's use this Euro NZD as example. Assuming you want to trade Euro USD, which you are seeing on the screen right now, the first thing you need to do first is to check your liquidity spots, your supply and demand zone. Draw your supply and demand zone. And you know how I do. I'm the top-down analysis trader. I observe the market from the higher time frame down to the smaller time frames because this is how the big boys trade. So you mark out your support and resistance level, your major risk zones in this stuff. First of all, the monthly time frame is for you to get the trend of the market. Is the market trending or is consolidating? If the market is consolidating here, please run away from that pair. I don't care what you guys say. In another video where I'll be talking about time frame, the best time frame to buy, I'm going to explain this in details. But for the sake of this video, please, you check the monthly time frame. Is it trending? If it's trending, yes, that is the pair you want to be trading. Even if the lower time frame is ranging, don't worry, it's gonna trend as well. If the monthly and the weekly is trending, don't worry, every other time frame will follow suit. It's just a matter of time. So what are we looking at? So first of all, you check if it's trending. From what I'm seeing here, the monthly time frame is on a trend, bullish trend. Okay. So despite the fact that the market consolidated, ranged for some time period of time, and in this region here, the market range. Okay, so the market range in this period between Monday 3rd April 2023 to February this year. That's 2 years range. The market range for 2 years and then broke out. So I told you that I usually tell you that whenever the market range and if it breaks out, it's going to break out equal number of pips that the range took. So if you mark the range, this is the number of pips, then you put it here. So we know that it is exactly at the resistance. Can you see, guys? It's exactly at the resistance where this market is going to. So we take our stuff and mark the resistance. Take our resistance here. This is our resistance. Because of these two rejection, this rejection, where the market reversal. So this is a very important region. So we mark it out. So this is where the market is going to, and we know that the market is very close to that place. No brainer, nothing is stopping it. The market is heading to the resistance zone. It has broken out of this range and it's going up. So one thing you need to understand is that the euro pairs are now trending. It was ranging. Immediately the Euro USD break out. Euro USD sets the pace. It's the mother of the pairs. It has set the pace. It has broken out and it's trending. So every other pair, forex market now is bubbling because Euro USD has broken out. Everything is now on set. The trading, the pairs will be going smooth, especially the Euro pairs. They are all trending right now. So if you want to trade, focus on those pairs. Forget about every other pair. Don't say because I'm a GU trader, I'm a GJ trader, and I must trade GJ. Welcome, break, come shine. That is not how it is. I've studied it. Those things are rubbish. From what I'm teaching you here, it works in indices, crypto, forex, commodity, anything you want to be trading. As far as it has charts, you can analyze it very well. And you look at opportunity. Anywhere you see opportunity, you are trading it, irrespective of whether it's a pair that you are conversant with or not. The same principle of buying and selling happens all over. So guys, how do you study pullback? Now, the first thing you need to do, you need to analyze the market first. The top-down analysis, you start from the monthly time frame to look at what the market is doing. Is it trending? Yes, we've confirmed that the market is trending. The next thing to do is to look for your major zones, support and resistance zones. So you go to your weekly time frame, you look out for the major zones. Okay. So So we have this. So major zone, major zone. So am I seeing any region? I'm seeing this environment. I'm seeing this environment here. This region. So this is this. So you come to the daily time frame. That's where you'll be able to see it very well because in this weekly time frame, it's not really stable. So you come to the daily time frame. So if you look at the daily time frame, it also ranged in this environment. Okay, so let's box it out and see what I want. It ranged in this environment here, here to this point. Okay, so the market range at this point, and the market has officially broken out of this range again. You see, this pair has a way of ranging before moving. Range, move, range breakout, retest, move, range breakout. If you look at from how it started, it has always been like that. Range breakout, retest, move, came here, range, broke out. It ranged again in this environment, it broke out. Now it's ranging again, it has broken out. So this breakout is just fresh. So we have here, from here to the resistance point, we have there to trade. So come this week, this is what we'll be looking at trading. So let me put my resistance point from where the market is to the resistance point. This is over 240 pips, which is a very good trade, which is a very good pips to bank the market, 240 from where it is to the resistance point where the market is headed, 240. So come down to the 4 hour time frame. Let's see. So guys, so let me just box out this stuff and draw the normal support so that now this is a very important level because this is the level where the market broke out. So I'm just use this stuff here to put it out. Okay. Now, this level, the market has broken out this level. What are we expecting the market to do? Come this week, I'm looking at this market from Monday, this market will be selling. It will be coming down seriously. Because a lot of people will say, um, if it's coming down, you go to the lower time frame, you'll be seeing strong sell, like 1 hour, 30 minutes, you'll be seeing sell. And a whole lot of you jump traders will be selling. Why the main direction of the big boys is to buy. So I'm going to take out this environment as well. Let me use this stuff to box out to mark out. This is another important level. This is another important level. So the market is going to either retreat to this point or this point before resuming the buy. Before resuming the buy, the market is going to retreat either to this point or this point. Now, how do we read the retracement so that we'll be able to bang the market, catch it right there? Because I will share my trade how I catch the market at the bottom of the end of the retracement at the beginning of the impossible. I catch it and I buy the market to the top. I always do this back to back. This give me a very good risk to reward ratio. Sometimes my risk to reward ratio is 6:1, 5:1. So that even if the market does not hit my TP, if the market even go half of my target, I've already made 3:1 profit, which is a very good. So how have I been able to do that? I'm going to show you. Now, as the market is on a bullish move. Now, I told you, watch my previous video, I always tell you that if the market breaks at a level, market breaks out a level, how will you know if it's fake out or real breakout? How will you know? Now, how to know if the market has broken out officially or it's just fake out? The question is, how did the market break out? Was it breaking? Did it break out just with a small move, small jerky move out of the breakout? Or did it break out full force with an aggressive candles? If it breaks out small candles, jerky out of that region, there is high likelihood that that is a fake out. The market might come back and then do something like this after the breakout like that, it's going to boom. It's going to just go a little bit up and drop aggressively. The reason is because there is no volatility. The buy side is profit taking has started, and the market does not want to go beyond that level. So the market is going to drop. But if the market breaks out with knife, with this move like this, boom, 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 as if it's going to the sky, and you see the sizes of the candles are big, that is officially broken. That level is officially broken. So from what we are seeing now, the level is officially broken. Why do we say so? If you look, the market was aggressive. It got to the region, it bridged a little bit, and we started seeing small candle as if the level is going to hold. But then we saw this breakout, this candlestick that breakout end with rejection. We're still watching, and then we saw these other 3 candles that are becoming bigger. So the higher it goes, the bigger the candles is coming up. It shows that these buys are healthy. So a lot of people have seen this. They want to get in. The big boys, some of them want to get in. So how do they get in to join this trend? They will have to drag the market back below so that they will have a good price and then pull the market further. Okay, so that is the process we want to be. That is the trade we want to be. When the market comes back, give us drop, gather liquidity, and then move to the upside. But how are we able to get that? How can we get that? How do we know that, okay, this retracement, this sell is just a retracement and going to start the buys back? Now, guys, this is what you should do. This is how to read retracement. So now, when the retracement is coming, how is it coming? Is it coming full force? If it's coming full force, guys, if it's coming full force towards the support level, then you know that it's likely going to break this level. So if the first candle comes and give us strong, it might come first candle on Monday, give us strong, then as it's getting to that level, it started weakening. The candlestick becomes weak, started becoming weak, and we started seeing those jerky move, consolidation within this region. Then we know that this level is going to hold. This is where they want to start resuming the buys. I repeat, if the market is coming aggressive down to that support level and it gets here with an aggressive candle, know that this support level is going to break. So if it breaks this level, they will be coming from this level. Remember, this is the guy who started the move, and the guy is still in charge of this trend. Okay, so even if the market comes and break this level, we know that this buy here is still holding. Don't say, I know some of you junk traders, you start selling. You start selling the market because the market has broken this. You start selling. Don't worry. It's going to burn you if you do that. Now, what I'm teaching you is only trade pullbacks, guys. Pullbacks, there is money in pullbacks. Now, the reason why I went to the higher time frame, the monthly time frame, is to know what the market is giving you, what the market is, the direction of the market. If the monthly market is telling me, guy, I'm going to the top, every other boy should join. Now, in this case, the weekly and the monthly is telling you, guy, I'm going to the top. Every other time frame is going. I don't care the kind of trader some of you will say, but I'm 20 week, I don't have time to check that. I'm 15 minutes trader, I'm 1 hour trader. The question is, are you making money? The truth is that you're not making money. Don't come and argue. You are not making money. How many of you guys who look at the smaller time frame, who trade only the smaller time, how many of you guys are making money? Guys have been there. You make money today and you lose it tomorrow. It is not consistent. It's not. So you go to the monthly time frame to see the direction overall. So if the monthly and the weekly is telling you that this is where we are going, forget it. That is the direction the big boys are going. So what your job is to come to the smaller time, to draw your support and resistance, and come to the smaller time frame, the 4-hour time frame, to look at the pullbacks. At the end of those pullbacks, that is where you want to start your buy, to resume the buy, to join the big boys. I don't care if the 4 hours is doing me sell. That will show you a trade that the 4 hours is just sell. But I took the buy and it worked out. So those people who are trading lower time from 1 hour, 15 minutes, 30 minutes, they will be seeing strong sell. Even the 4 hours was showing a strong sell. But I was just waiting for it to get to that support level. As the market just pulled back, give me the setup I want, I entered the trade and I was able to ride the trade up. It was in Euro USD. The reason is because the smaller time frame will always align with the bigger time frame, no matter what they do. They will do some small. Those cells you are seeing in the smaller time frame is a retracement in the higher time frame. It's just a retracement. So that is the retracement we want to catch. In fact, I even prefer the market to give me a deep retracement. So if the market comes at the open on Monday, it tested, it comes back to this point, breaks it. Don't be scared. Don't be scared. Don't say, the trend has changed. Oh. The trend has not changed. It's still on the trend because this is the guy who started this move. This guy here. This guy here. This young man. This young man. This young man who started this move. This young man here. Grew the market here, first leg, give us consolidation. Now it has gone for the second leg. So we expect that the third leg is going to come. And that third leg is the one that's going to might likely push it to the resistance point. So this trade, it has the potential of giving you over 300 pips. If you catch it very well, it's going to be. So at this point, some traders will, you don't need to chase the market. Don't worry. I'm giving you 99% certainty that this market is going to drop. Come Monday, Tuesday, this market is going to drop. It's going to retrace, going to give us a deep pullback. So relax. Don't say that if you missed it, you have not missed it. This is the market I'll be trading this week. I'll be observing it very, very well. And when those pullbacks start coming in, I'll be smiling. While some junk traders will be pursuing trade, looking for sales, I'll just be smiling and watching them. Then when the market gives me my move, my entry, I will hit the market big time, push it to the top side, and make all the mullahs I can extract from the market from this trade. So the market is going to give you a pullback. So the question is, when the market is giving you a pullback, how is it coming? Is it coming full force? If the market is coming down full force to your support level, know that the higher possibility that that support level will not hold be there. So when the market breaks that support level, observe it in the next support level. It must surely breach down. For you to know the one that the support level that we hold is that as the market is approaching that support level, the momentum is dying, the speed, the aggressive nature of those candles are dying. You started seeing small candles towards that. And when it gets to that place, you will see what they call the market will move from a trending market to a ranging market. The market will consolidate. As the market consolidates, then you know. Look at this one. The market move and then it started giving them retracement. Look at the retracement. Now, as it's giving this retracement, the market has entered into a range. Then before it breaks out of that range, this is what the market is going to do. So it will drop and continue to the support level once the market starts ranging within that level after the drop. And you observe how did it drop to that level. Did it drop full force, aggressive candle? Did you see big candles? Or did you see small, tiny candles saying, Jackie, 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 Jack. That is the language. That is the song I sing. If you start seeing small candles like this, coming to that level, and the market start giving you something like this, start ranging, then expect that the market is going to do this. That is what the market is going to do. I'm 95% certain that that is what the market is going to do. So before they will move, they will have to do what? They will have to come out, gather liquidity here. This is the point I always take my trade. I'm going to share my trade with you guys. Just calm down so that you know that this thing works. I'm going to share my trade. The market will do this stuff and then goes in. Now, the reason the market is going to do that is just use these jump traders that trade breaker trader. The market is breaking out a support. Now, support turns to resistance and you start selling. The market will just give you a little profit and boom, back in aggressively, back into the range. And then the market will go up without reversing. And then you'll be crying. Oh my God, it was just a fake out. Why wouldn't it be a fake out? Because you were not able to read the rhythm before the breakout. So the question is, how is it coming up to my support? For some of you who are support and resistance trader, you just say you see market in support, you buy. You see market in resistance, you just click sell. If you do that, you're going to lose money, and forex will not get tired of eating your money. Your question is, how did it get to my support? How did it get to my resistance? Is it coming full force? Is it coming jerky? If it's coming full force,
run away. That support level will not hold because the cells are still healthy. Okay, the big boys still want a deeper pullback before this resume. But if it's coming, it started with initial gree, it started with initial gra, it started with full force, but as it's approaching the support level, the momentum start dying, the candles become small, and then if either coming from a trending, then the market will now transition to a range. Once you see that transitioning to a range, then know that that support is going to hold. There is high possibility that that support is going to hold. So when should you take a trade? You are going to take a trade when you see that liquidity gap below the level, and then boom, once it happens, the market is going to move. So that is how you read support and resistance. So come this week, Euro NZD is going to give us over 300 pips target, because if we take the market from this level, we're going to ride it down to the resistance level, which is over here. So if we take this level, long position from here, where the market is going to pull back to, because we know that the market is going to pull back to that level, definitely it's going to pull back before it gets to that resistance level. So if we take the market from this region to the resistance point, we have over 300, 280 to 300 pips target. 280 to 300 pips target. Okay. So that is a very good trade. If you hold that, even in 3 days, you're able to hold that for 3 days, and the market gives you 280 pips. That is not a bad one. It's better for you to hold that particular trade and make 280 pips than for you to be entering those your nonsense 5 minutes, 15 minutes trade that will be giving you 30 pips, 30 pips. You lose one and you win two, you lose two and win one, and you're just over trading, sapping energy from yourself. It's not worth it, guys. It's not worth it. It's time for you to transform your trading from a junk trader to a profitable professional trader who is patient, who knows what he wants from the market, and know when to enter the market. So, guys, I will now be sharing my trades with you guys, the ones I took this week that just finished. Now, if you watch, I had two positions on this trade and no one hit stop loss. The first one is this one. Now, how did we take this trade? I'm going to break it down one after the other so you know that what we are saying here works perfectly. Now, I'm going to remove this stuff here and remove this stuff here, and then I remove this stuff here. Now, from what we are seeing, the market, look at this market was coming all of this move. It came aggressive here. I saw this point as a support level. Now, I did not take the trade here. The reason is because the market was aggressive. The market broke aggressively. I did not allow it. I know that since the market has broken that level with this momentum, the market is likely to break that support. And we did not get any transitional phase. There was no consolidation whatsoever in that region. The market was just going. So avoid it. It's going to burn you. Then the market broke, they tested it and still dropped. Now, on getting to this level, the market start giving us from trending market to what? To a ranging market. So the market give us, and if you watch, this is 4 hours candles. So you should know that it took time. 4 hours candle is not a small candles. So for it to trend for in 4 hours candle for how many? One to range 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 4-hour candle. So this took how many days? Wednesday 30th and broke out on 30th July and broke out on August. Friday, 1st August 2025. So you should know that this is not just a small ranging. So the market transition from trending to ranging. I knew that the sell has died. The momentum has died. They were aggressive, but they stopped. Now you see, after that, you see the candle, our green candle. Then the next try it made to break this high. The next time it goes low, it could not break this level. So this level becomes the new support level. So we just marked it out like this and then relaxed. Okay. So the market came range, and this is my range. This environment is my range. So I just mark it out. Just mark it out. So the market was just ranging within this region. But before it broke out, the market gave us this liquidity graph. I was able to take the market from this level and then shoot the market to this level. The market hit TP and then it entered into another range. Then it broke out. Now, the second entry, how did I enter the second trade? I entered it again in this level. Why did I enter? Now, when the market got here, the market entered another phase of range. It gives us another consolidation again. Look at the consolidation. It's consolidated within this region and here. Okay, so the market comes, enter, give us a consolidation, pull out of it. And those sell traders start putting their sell order. And then what happened? The evening star, 4 hour evening star, after the market give us this doji, which shows that the momentum has died, and then the market came back with an aggressive move back into the range. We took this trade here as this market it was coming back to the range. And if you observe, that was when the counter trend line broke, and then the trend was ready for ride. So we're able to ride this market. If you look, the counter trend broke in this level. If I use the 1 hour time frame, you're going to see it very well. Okay. So you saw that range, and you see the jerky movement I was talking about. The market broke out of the range. But the question is, when it broke out of the range, how was it? Was it strong? Was it aggressive? If you look, it was jerky. It shows that this market is just doing a fake out. And then when the candle that took it back and came in, one candle wiped out what 9 candle did. One candle. So that is when we entered the trade and we rolled the trade. Although our target was supposed to be this level, we are targeting over 180 pips, over 200 pips in this trade. But the market gave us some profit. And then when I started seeing this rejection, we took out our trade and then observed the market again. The market came back and gave us another range and give us another liquidity grab in this region. After this liquidity grab, I told my people to enter the second entry. And that is the second entry we entered. The market gives us another over 100 and something pips. Okay, over 100 pips in profit. We banked it. Then before Friday, we took out our position. The market came back and retested and it's going back. But though we did not take this trade again, but these two trades gave us the profit that one would have given us. So you see, you don't need to force the market to hit your TP. You're not the control of the market. Take what the market gives to you and relax. Now, because we took what the market gave to us here, we were able to take the profit, saw another position, saw another opportunity, entered the same trade, and then the same TP. The market did not hit the TP before the week runs out, but it gives us another profit over there about 100 pips again. Adding to the two, we've gotten 200 pips for the same trade. But if we are held and hold it, would have just taken only one profit. But now we took two trades because we were able to read the market. So when the market gets to this region, we were observing this in this region where it started the move. The market gets to that region, it broke it a little bit and entered. When it started giving us this non-aggressive move to the upside for 4 hours candle, we had to close because we know that a deeper pullback is coming. We now close, and then behold, that deep pullback came, and we saw these candles, these three strong red candles comes in, and that is how it was. So you see, what I'm teaching you here, we're able to help you to know when to enter the market and when to leave the market. So when you start seeing, if you are buying, and you start seeing the buys are strong, but you start seeing the 4-hour candles becoming weak. After one 4-hour candle is weak, the next one becomes weak. Once you've gotten 2 4-hour candles that are weak, that are not doing anything strong again, close your trade. Relax. The market is preparing to have a pullback, probably a deep pullback. So this is how we're able to enter and exit and come out with something. Despite the fact that the market might come back to reverse on us. But if we are holding this trade, we might have hit break even. Before, I'll be on a good trade. I'll make money. I will allow my trade. And once it goes to a certain point, I break even. Before you know it, reversal will come. The market will take me out on break even and still go back. Those problems was what I was passing through. It's not like I entered a bad trade, but I entered a good trade, but I was not able to go out with a profit. But for now, I'll be able to read the market, know that from reading the market alone will tell me what the market wants to do. So once I started seeing those signs that the market is no longer aggressive towards my direction, I take what the market gives to me and relax. Probably the market might come back to that to retest that environment and give me another entry, and I will still make money out of that same pair. This is how you read the market. If you're able to understand this stuff, guys, you'll make money in forex. In fact, you'll just be making money. Now, observe this market. Everybody that is looking at this market from this level, from this region, because mind you, let's assume that this feature was not seen. I was just saying only this as at the time. Now, when everybody that is looking at this, if you go to 1 hour time frame, this is a very strong sell. Go to 15 minutes time frame, 1 hour time frame, 30 minutes time frame. Oh, this is the very sweet sell. The market is selling, trending. So those people who will just come on a daily and look at 4 hour and say, okay, the market is selling. I'm only selling today. Well, I will not say that your trade is bad, but you should know that when the market catch you, you're gonna burn because you did not know where the big boys are, the direction the big boys are going. All these sales you see here are just retracement from the bigger time frame. Okay, all these trades you see here are just retracement for the bigger. This is just a retracement of the daily and the weekly and the monthly time frame. So if you're just looking at this time frame alone, guy, you are finished. So the market was selling strongly. I was telling my people, I'm looking at buying Euro USD. Some people were telling me, how can you buy Euro USD? Euro USD is selling strongly. I said, relax. It's going to drop. It's going to weaken. That sell you are seeing is just a retracement. I'm waiting at it for a level. Once it get to a level, I observe. It first of all got to this level, I noticed that it's not going to hold because of the nature of those candles, and we did not get any transitional phase in that level. So I know that it's not going to hold. And behold, the market did not hold. It retested it and dropped again. But when it gets to this level, I observed it. The market was moving strongly, but the momentum started dying. You see this whole candle coming in, and then the next time it made that move, it could not make a new lows. Had it been made a new low, we say okay, the trend is still here, but it did not make a new low. It came to that same low, equal lows, rejected. The market entered into a consolidation. That is the phase we want to see from a trending to a consolidation. Once you start seeing that, then we know that this trend is over. So I was waiting for that liquidity graph, and it came here, and then as the market came here and broke, as it's coming back, we took this trade and the trade banked instantly. You see, just 1 4 hour candle gave us the profit. This is over 100 and something pips trade. The market bank. The same thing repeated here. The market entered into a range and then give us that liquidity graph. This is where we picked it up. And if you want, the candle that broke the counter trend was our trigger candle. This is what when the market was coming back inside here, we took this trade and then we rode the market to the top. The same thing we repeated here again. This works over and over and over again. You saw how we are taking it. Now let me go to GU. I think the same thing we did in GU come this week. Now look at the trade we took. Now observe GU now. Observe GU. The market was selling. Now the market came reverse from a support level. The market start buying. Now after the market did this first leg buys, we observe the market. The market entered into a range like a pullback. Now, as the market was ranging, we were observing it. This is where we pull our trigger. The market broke out of this range. Then, if you look at the smaller time frame, the 1 hour, you see the market broke out. This circle here, it was our trigger. This evening star, it broke out and then gave us evening star, entered back. When it entered back, we took our trade. Now, the question is, how were you able to know that it's going to buy again? I observe the movement of the candles. Let me remove this stuff so that you'll be able to see. Now, look at how it broke out. I always tell you, how did it break out? Did it break out aggressive? If it had broken out strong candles, strong red candles, we would have taken this trade because the move was strong. But it was not strong. You see how it tried just small candles and then it came back to the range. This was when we took our trade, but we did not take our trade in 1 hour candle. We took it at the close of the 4 hour candle to actually see, because if it's a fake candle, the 4 hour candle will end red. We observe it. It was not a fake candle. It was a it was not a breakout, rather it was a fake out. You see that 4 hour candle, it ended up being a pin bar. It ended up back inside the range. And this is when we took the trade. Let me zoom out very well. So you see, broke out and then came out. This is like a liquidity can gather liquidity and entered back. So at the close of this pin bar, this 4 hour candle, when the market was back inside here, that was when we took the rain, we trade. You see that transitional phase breakout and then the market moves. So this is what we are looking for. This move like this. Sorry. This move like this. This is what we are looking for. As the pullback is coming in, pullback is coming in, pullback is coming. Even if it gives us a deep pullback, it is this young man here that started the move. So the market has not taken out this young man. So the buys is still in place. Then we will enter into a range. Then after that range, give us a hunt and then aggressive move to the top. This is what we are trading. This is what we are. This is where our trigger is always happening. I've been able to share a very vital gem in this episode. So guys, go and observe it. You'll be able to, if you combine this with your top-down analysis, know where the market is going, the direction of the market, only trade in that direction. Then when you follow these rules, what I've taught you here, guys, I don't see any reason why your trading journey will not transform. As you can see, all the trade we've been taking has always been banged. This trade banged. This was our first trade. This was 150 pips trade. It banged. And then I shared the Chef JPY trade with you on Thursday. The Chef JPY. Okay. All right. So if you watch the Chef JPY, was when we took the trade. Now, if you will, everybody that is looking at this trade on a lower time frame will say that this market was really a trend, a selling market. Why will you want to go and buy? The general trend is buy. So I'm not looking at sales. Whatever I sell, even if it's selling in 3 days, it has been selling for 3 days. That is not my business. What I'm concerned is the buy side. So the market was selling. So if you go to the 1 hour and 30 minutes time frame, you will see a very strong selling trend. But we are not interested in that. We are waiting for you to come to our level and give us an opportunity, then we enter. So the market was selling, aggressive move. Whoa, don't touch it, don't touch it, don't touch it, because this is the first support level. This strong aggressive candle that came into that level. When you see that, know that there is high possibility that the market is going to break. So that level did not hold. And we know that the level is not going to hold because it's still headed. You saw the level did not hold, and then the market dropped again. But then the difference in this one is that as it's coming down, although it was aggressive, but you see, one because that there you started seeing this small candle. And then what happened? We saw this strong move, like a V formation. So when we see that, this is like we'll say 85% retracement, we are relaxed. It's not because we see that does not mean that we'll start putting buy. We have to allow the market to still give us what it's doing, to tell us what it's doing, to have a clear direction. Because I told you before we enter it, we need a transitional phase. And that transitional phase must come with a range. Now, the reason why this ranges happen is because the big boys who have the bigger orders need to lock in their orders before the market moves. So this range opportunity gives them more time to put in their orders before the trade moves. So that is why we follow the big boys. We trade like the big boys. In the trend of the big boys, that is where we want to be. So allow the big boys to tell you what they want to do. Then join them. You are going to make money in this business. So, guys, when the market put, we say, okay, one criteria for feed, we have a V formation. What next? The market entered into a range. You saw the range. You saw the range. Between these two levels, the market was ranging. Now, our question is, the next thing we are looking for is a breakout of this range, aggressive move back in, we are in this trade. And then what happened? The more it sells, it's not taking out this level. The more it sells, it tried this, it could not take all this level. The next time it tried, it could not take all this level. It's showing that that level has locked in. Okay. Then he did this. It reached the resistance. It dropped aggressively, and then this was when we pull our trigger. It broke out of this level, broke out, gather liquidity and pull in aggressively. This is an evening star formation on a 4-hour time frame. This is no brainer, guys. At the close of this candle, we took our trade. The market did this, retraced a little bit, and then after that, the market banged. Okay, this was when we took the trade, and the market pulled from here to here, gave us over 100 pips. Then, as we start seeing this rejection, we closed out the market, and then the market came back here. Then on Friday, I was able to enter this, just took a little bit of, still give me small profit, and that was it. So this market, we were able to extract over, some persons closing 100, some persons closing 80. Though I closed in 80, some were able to close in 100. My student, I always tell them, I've given them the signs when they start seeing the signs. So when some of them who were on the chart saw the signs and closed out earlier, I saw it later and I closed out at 80 pips. And then this market, but we know that this market is coming to this level. So come this week, since it was not able to break out of this week, that level, we know that come this week that is coming, this market is coming here. So it probably wants to gather more liquidity before going. And this time, if it happens early in the week, before the week runs out, the market is going to bang. So this is how I'm able to read the market. If it happens on Monday, Tuesday, with high possibility that before the weekend runs out, the market will bang this level, then do the correction on Friday, it comes down. That's how the market operates. But if it breaks out probably Thursday afternoon to evening, that means the market might not likely do all the pips on Friday. Because Friday, Friday usually use Friday for correctional moves. Okay, if the market has been trending in one direction from Monday to Thursday, Friday is for correctional moves. They use it to correct the market. The reason is because the valuation there is how each pair has number of pips they move in a week. Okay, so once it's coming above that, they will have to correct it. That's how it works. So, but if this breakout happens Monday or Tuesday, then I will be comfortable riding this trend to this top because I know we still have Wednesday, Thursday, and probably early days of Friday to hit our target before any correctional move will happen. So we are still watching this market. We've extracted cash from this. We know we are still going to extract cash from it again. So at this point, Chef JPY is ranging right now. It's still in this range. So come this week, we'll observe it within this range. How did it behave? And then we were able to drop the signal and we'll get the entry. So that is how to read pullbacks. You observe the pullbacks. How is it coming out? How is it coming to my level? Is it aggressive? If it's aggressive, run away. Know that that level is not going to hold you. Watch it on the next level. Then if it's dying down, if the move is coming not aggressive, slow move towards your support or your resistance level, you know that it's going to hold. Then the next thing you want to see is that transitional phase. These are the two things that you need to know. You can save this video, rewatch it, go to your chart, backtest it, and your eyes will now be opened. Now, I just want to say something right now. Those of you who are trading gold, please run away. Don't trade gold again. Gold is not to be traded right now. The reason is because gold has entered into a range. Go to your higher time frame, you're going to see that range. Monthly and weekly time frame, the market is currently ranging on gold. The market is currently ranging. Look at, I've already boxed it. You see what the top-down analysis does for you? The top-down analysis helps you to know the market should be trading, the market you shouldn't be trading. Right now, gold was on a serious trending market for over how many years? The market has been bullish. But now, the market has entered into a range. So for you to trade gold again, you wait for a breaker, either to the upside or to the downside. That is when you should resume trading gold. For now, don't trade gold. That is why some of you who have been trading gold very well is noticing that your trade these days is no longer effective, no longer working out. Sometimes you enter profit, sometimes you enter loss. The reason is because the higher time frame has entered into a range. So every other time frame will follow. So the smaller time frame will be giving you nonsense and false signals. For those of you who are trading gold, you can attest to that right now, that your signals are no longer working perfectly the way it used to work on gold. The reason is because gold is on a range. If you look at the smaller time frame, this is 4-hour. Let's go to 4-hour time frame. The market has been on this nasty range, down, up, down, up. It has not really been going on any direction, as you can see. So avoid trading gold. This is the gems I want to give you for free of charge. So I just want to make this video very short. On next video, I'm going to teach you the time frame that works. Although you've been able to hear some of it from this broad, but I'm going to go in the greater details in our next episode. Then I will also be sharing with you the time frame you need to enter your trade, the time frame you need to enter your signal. So I just want to unshare my screen right now with you guys. So guys, thank you for staying through to the video. You've been able to see what we are looking at. This week we are looking at trading Euro NZD because Euro NZD have officially broken the range. It's on the bullish side. We also look at GBP USD, Euro USD. These are the trades we want to be taking. Please don't trade gold. We also look at Euro JPY, Euro NZD, GBP USD, and Euro USD. These are the 4 pairs I'm looking at trading this week. So you can go back based on what we've taught you here, analyze the market, wait for your levels, wait for your pullbacks. Only trade pullbacks. Pullbacks, that is where the money is, guys. And just look at market. Pullbacks is what you'll be trading. Only trade the trending market. If it's a selling trend, let the selling trend be on a weekly and a monthly time frame that the market is selling. Then look for sell opportunity. After drawing your support and resistance levels, look for selling opportunity. And you're able to read the market based on what I've taught you. Read the market, as it's coming down to your level, how is it coming down, and all of that. You will be able to see that your trading journey is going to be massive. It's going to transform. So thank you very much for staying through to this video. Please, 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 please. We are watching our videos and you're not subscribing. No, that's not good. What we are giving here, we are giving it free of charge. A gem that people pay hundreds of dollars to get access to, but we are giving it out free. Please, why not like and subscribe? And please share. If you know that trader who is struggling, share this channel. That is the highest gift you can give to them. Because they've lost a lot of money. Give them this channel. They will learn, get knowledge, and make profits. And then they will come and thank you later. So thank you very much, guys, for staying true to this video. Please share, like. Next video, I got your back. I'm going to teach you the time frames that you should be looking at in the market and the time frames you should avoid. Though we know that this business is not a time frame business, but then you should understand that there are time frames that gives you false signals, and those time frames you need to avoid them. I'm going to teach you that in the next video. But right now, I want to be signing out. See you in the next video. Peace.